Whenever US enters shutdown, investor everywhere pauses.
Let's start in the US, where the government has shut down for the first time in almost 7 years.
Not because it's just a political drama, but because it impacts liquidity, sentiments, and global flow of funds. I am CA Aayush Bhatt, and in next 2 minutes, I'll quickly explain you in a very simplified way what a US shutdown exactly means, why it occurs, and how those ripple travels all the way to India and impact us. A US government shutdown simply means that government does not have legal permission to spend the money. Budget is not yet approved, and the result is all the non-essential work is stopped immediately. Offices shut overnight, employees stop getting paid, and even the contractors stop getting more money. Even key economic data like inflation and job numbers are not released. When the data goes silent, the market gets nervous because nobody is sure about what is happening in the economic landscape. So the question is, does a US economic shutdown happen when US is running out of money? No, that's not the case. But it happens when political leaders are not aligned on how that money should be spent. The 2018-19 shutdown happened because of a political conflict over spendings on US-Mexico border wall spending. It lasted almost 35 days. And the recent 2025 shutdown, which started on 1st of October 2025 and lasted for 43 days till 12th of November 2025, was again a result of disagreement over spending priorities and healthcare. In first few days, the economic impact is lower, but as the shutdown drags on, it increases day by day. Economists suggest for each week of shutdown, US GDP slows down by 0.1% to 0.2%. Here is something to think about. If people are not getting salaries and businesses do not have money to spend, what happens to their spending? Obviously, it slows down, but here is where things get interesting. US market, despite of all the noise, still stays strong. Why? The answer is, all the investors know that US shutdown is simply a political issue and not an economic disaster. Don't trust me? Look for yourself at history. In 2013, after the shutdown, S&P 500 shot up by 11% the next year. Even after 2018-19 shutdown, it shot up by 36%. And today, in 2025, it is near record high thanks to AI boom and strong earnings. Now let's talk about India. You might be wondering, how does a political fight in US impacts us? Well, the impact reaches us through money flows. Whenever global investor gets nervous, they try to pull out money from emerging markets like India, and the result is rupee becomes weaker against dollar and it is not as stable as it should be. Even the exports get impacted. Slightest slowdown in US economy results in weak numbers of Indian export. IT projects and manufacturing projects of Indian companies which are in line with US federal spending may face delays as well. But just like US markets, Indian markets also has mind of its own. It may react more to domestic news than global drama. For example, recently in 2025, when US shutdown started in October, Indian markets rallied more than 3,500 points. RBI kept its interest rate stable. Even if you look at history since 1980s, US shutdown have come and gone. Sometimes for days, sometimes for weeks. But pattern is always the same. Markets may wobble for a while and in the long run, it will stabilize. It will recover and sometimes even rally up to make the new highs. What we must keep in mind is, instead of big headlines, US shutdown is just a political deadlock and not a long-term economic setback. Surely it would slow down things temporarily, but long-term direction of US economy or Indian markets will not be impacted. The smartest thing that we, the investors, can do is to stay calm, stay diversified, and not let short-term news impact our long-term goals. If you like this video, give it a like, share it with your friends, and do subscribe our channel. Thank you.